What if I told you there was a sort of less talked about, super high quality dividend growth style ETF that might not only be the perfect option for those dividend growth investors out there, but also what if I told you this ETF has outperformed VYM, DGRO, and the King SCHD over multiple different timeframes? Well, in this video, we're going to talk about what might be one of the best dividend growth style ETFs across the entire stock markets and one of the best options for dividend growth investors out there. This ETF has already found a spot in my portfolio and I plan on buying a lot more of it in the future. And I promise you, if you're a dividend investor, you're going to want to learn a little bit more about this one. So if you're a dividend growth focused investor that loves dividends and loves growth, make sure to stick around, drop a like down below, and let's get right into this. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the ETF we're talking about might or might not be a new one to you, depending on how researched you are when it comes to dividend growth ETFs, but we're talking about DGRW, the Wisdom Tree US Quality Dividend Growth Fund. Now, I personally came across DGRW maybe 2 years ago or so, and I've sort of been ranting and raving about it ever since, and I even have added some DGRW to my portfolio as of right now, but as you guys probably know, I'm still growing my SCHD position, but DGRW, along with other dividend growth ETFs, are going to be added to my portfolio in the up and coming years. Now, to learn a little bit more about what this portfolio has to offer, how this portfolio works, etc., it says Wisdom Tree US Quality Dividend Growth Fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the U.S. equity markets. It then says why DGRW gain access to the current investment landscape of U.S. large-cap dividend-growing companies, and this is by applying quality and growth screens, also used as a complement to high-yielding dividend strategies or as a replacement for large-cap quality strategies. Now, one of the main reasons I personally like DGRW, and one of the main reasons I'm going to be adding this one to my portfolio in large amounts in the future, is because of this portfolio's top holdings, and the fact that because I'm a relatively younger investor, I'm currently 31 years old, although dividends are very important to me, I've said it before, I'm planning on living off of dividends in the future. I also want my portfolio to keep growing over time, which is why I need some exposure to names like this. Now, just to get it out of the way, this is probably the worst part about this entire ETF if you were to ask me. The expense ratio is 0.28%, which is pretty expensive, especially if we're comparing this to things like SCHD or DGRO or even VYM. This expense ratio is pricey, but I promise you, going off of the historical returns at least, the expense ratio is not necessarily going to get in the way. Now, looking at DGRW's performance on the 1 year, it's up 15.57%, and this is just as far as price return goes. Year to date, this ETF is up 12.3%. So this ETF, again, even though it is focused on dividend growing companies, this ETF has been growing like crazy. Almost every single time I look at DGRW, depending on what's going on in the market, this ETF, it seems like it's always at a new high. Not to mention on the max time frame, this is since around May of 2013. This ETF is up 219% more or less, which is incredible. And like I said, basically over the last 11 or so years, this ETF has been trading up and to the right nonstop. Now, how is an ETF trading like it is? Well, of course, it's because of the top holdings as well as the overall holding breakdown. This ETF, in my opinion, is more or less the perfect breakdown for more dividend growth focused, younger investors, maybe in their 30s, because again, it does have a large portion of technology, which is going to grow your portfolio, at least it has historically. Doesn't necessarily mean it's going to do so in the future, but at least historically, technology has done very well. But then a ton of the portfolio is made up of things like healthcare, industrials, financials, consumer defensive, consumer cyclical, and a smaller portion of the portfolio is sort of in the more boring realm of sectors, things like utilities, real estate, basic material, energy, and communication. And with top 10 holdings like Microsoft, Apple, Broadcom, AbbVie, Johnson & Johnson, Nvidia, Procter & Gamble, The Home Depot, Coca-Cola, Pepsi, you're getting a really nice mix of dividend payers, dividend growers, but on top of that, different names in here, as we know for certain, have went up like crazy over the last few years and probably honestly have the potential to keep doing so, depending on what your outlook is. Now, one of the other criticisms of DGRW is the fact that this ETF owns so much Microsoft and Apple. For some reason, some dividend growth investors don't really like that. Honestly, for me, I'm pretty bullish on Apple and Microsoft long term. So although this ETF is pretty heavy Microsoft and Apple, I personally do not have any problem with that. Now, because DGRW literally has dividend growth fund in its name, let's take a look and see what the actual dividend growth rate has been, as well as the trailing 12-month dividend yield. We're looking at around a 1.5% trailing 12-month dividend yield. So this ETF, unless you're investing a massive amount of money in it, is not going to pay you a massive amount of cash flow from day one. Although, like we saw, this ETF really has more of a potential, probably long-term, to grow and make you rich off of that as far as price return, capital gains. But even still, this ETF not only pays a dividend monthly, which can come in very handy, especially later on when it comes to maybe living off your dividends and or paying all your bills with dividends. Giving dividends paid out monthly could be very handy. But on top of that, at least over the last 10 years, the dividend growth rate for DGRW is 9.4%, the last 5 years 4%, the last 3 years 4%, and trailing 12 month we're actually at a negative. But keep in mind, this ETF does pay a little bit of a weird cadence of dividends. There's going to be a few larger dividends throughout the year and then a bunch of smaller ones. But overall, over the last, say, 11 or so years, DGRW has been paying more and more in dividends over time. But again, this is not necessarily going to be the main focus, main concern when it comes to buying into this one, if you ask me. So now that we talked about DGRW, I pretty much explained how this ETF works and why I think it's honestly one of the perfect ETFs, especially for maybe younger dividend growth style investors across the markets. Looking into this ETF's actual performance over the last, say, 11.19 years, this ETF with $10,000 invested into it and dividends reinvested along the way would have had a total return over this time frame of 295.76%, or an average 13.09% per year, which is massive. Now, even other dividend growth names, super high quality ones, very popular ones, like DGRO, VYM, and SCHD, names like I definitely and like you probably hold in your portfolio as of right now, have not been able to break or outperform DGRW, at least on this specific time frame, which is substantial. Comparing DGRW to VYM, for example, one of the most popular dividend growth style ETFs across the entire market, on this time frame, 11.19 years, VYM with dividends reinvested just like DGRW has returned 10.4%, which again by no means is a bad return. I would be very happy personally with an average 10.4% per year, but stacking it up next to DGRW would have outputted a lot more as far as any investment over this specific time frame. But what about DGRO, another dividend growth ETF that I personally own and I really like a lot? DGRO over this time frame has returned 11.67%, where DGRW has returned 12.7% over this time frame. So far, VYM and DGRO have not been able to outperform DGRW, which is pretty impressive. But lastly, maybe most important of all, my favorite dividend growth ETF, SCHD, comparing DGRW to SCHD over the last 11.19 years. This one even shocked me. I thought for sure SCHD had outperformed DGRW during this time, but nope, not even close. DGRW again with 13.09% average annual total return, SCHD with 11.78%. So if you were to have invested into DGRW during this time frame and reinvested the dividends along the way, you would have had an extra $5,000 in your pocket compared to that even if you bought into SCHD. Now, I say all this to say, is DGRW the best dividend growth ETF across the entire market, and or is it the perfect ETF for you? Well, that's of course going to have to depend on exactly what you're looking for, but again, just comparing it to some of the other super popular names, it is at least interesting to see that this ETF has outperformed most of the popular names, at least most of the popular names in my book, during that specific time frame. And I think we can say for certain, at least historically speaking, this ETF is a powerhouse. This ETF has done amazing long term. But now lastly, most importantly, when it comes to DGRW, an ETF that's outperformed some of the most popular dividend growth style ETFs across the entire market, I want to hear from you guys down below. Is DGRW specifically an ETF that you personally hold in your portfolio as of right now? Let us know why or why not. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.